Hey traders, welcome to another global macro update. So in this video, we're going to be mainly talking about the correlation we see between gold, silver, as well as BTC. We all see that kind of basket of anti-fiats move to the downside, while we see equities. The S&P is still trekking up, still making some highs, and is still looking absolutely bullish right now. It's pretty unbelievable, but yeah, we are seeing that slight pullback from the negative correlation between BTC and the S&P, just because the S&P is going up, and obviously Bitcoin had a little bit of a bearish day bearish day today, and then overnight yesterday, and then we see gold and silver kind of do something else. Hey, can you talk about BSV bull, please? So yeah, we'll talk about that when we get into the crypto side of things. We're going to quickly touch on the commodities. First, we're going to look at gold. We're just going to stick on this kind of quad chart analysis. We can see just really quickly, touching on this price action, we do see that the price of gold broke below a key level of support at around 1950, 1960, kind of that range right there. Key level of resistance back in kind of mid-August as well as late August. And I was really looking to see that price hold as a key level of demand. We see that initial level of support validated back on August 30th, and then when we came back to it, it was a nice slow kind of descent to it. We held with a candle twice and then a candle closure, so it did look like we were able to hold that as a support, but today we did get a move to the downside. So the next level of support would be the confluence. If it does pull back to maybe these lows right there, which then would be the descending zone right there, creating a new level of support and confluence with that horizontal zone. That could be a level that we could be looking for, but really unfortunate that we could not hold that level of support for gold. But something to note on silver, we actually haven't broken the key level yet of around 2750. Now, if we jump to gold back really quickly, on a 12-hour chart, we still got around 2.5 hours, let's say, until this candle closure completes. So we could see a recovery and a candle closure at that 1950 zone. That would be really great to see in a phenomenal candle closure for gold. So we would be looking out for that in case we do get a recovery. And then on silver, we do still have that opportunity to have a candle closure on a 6-hour time frame at the 2750 mark to have a really nice validated level of support, which was a previous key level of resistance, creating our symmetrical triangle for silver. So overall, they do still look bullish. I would like to see gold recover a little bit and silver as well, but overall, they have not broken really below their structure. So in my opinion, it's still a valid symmetrical triangle for silver and a descending triangle formation for gold. So overall, don't want to call this invalidated structure just yet. Gold and silver ratio is moving back to the upside. It makes sense usually in a bearish pullback or a bearish market. Gold is going to hold its value better than silver. And on the flip side, if we're in a bull market, silver is going to appreciate at a greater rate than gold. So it's just a more volatile asset altogether. So we can see that previous key level of support for the ratio of around 71 ounces of silver for 1 ounce of gold act as a potential new level of resistance when we do get that pullback validation and the continuational impulse push to the downside. So the overall structure is still in play for a gold and silver bullish push, in my opinion. And also a little bit of discussion on the price of oil. It's doing pretty poorly. The key zone that I want to see break before I really am bearish on oil is the $39 mark. And if we look at a large time frame, let's just, for example, look at a weekly. We see that's a major level of resistance turned into a strong level of support. So that's going to be the top kind of formation, that rounded top, where we see a series of higher highs, a failure to form a higher high, and then we start to see a pullback where we start seeing lower highs. We could form a descending zone here. It could be a head and shoulders as well. But overall, you're looking for that key horizontal floor to break. And once it breaks, it's going to really start to kind of carry the momentum. The confidence from the bulls are going to be lost, been giving to the sellers, so then the bears are going to be having a lot more conviction to drive the price further down. There's going to be a lot more fear. And we do usually see crude oil as a risk on asset with obviously more production, more transportation. That's economically positive when you see more economic activity moving about. So the stock market moving up, this is moving down. So it's not, absolutely perfect, but the stock market is kind of on its own mind. Like, let's quickly take a look at it. It's just literally going straight up, basically. This is the 4-hour chart. And we can see since the daily, so this is that previous all-time high back in February. And we can see after it broke it, we've literally been going straight up. And we can see the NASDAQ is just on another level. Look at that roaring move to the upside. And this is a ascending wedge formation that's a melt up to the upside, retesting a previous resistance as a new level of support, and then it's continuing its overall momentum. So yeah, pretty unbelievable that the equities market is just not giving really a shit about many aspects of the actual economy, and it's just really a complete risk on environment that we're seeing right now. So we do have to take that into consideration. And something to note is Bitcoin was actually very positively correlated with the SPX and overall more traditional stock markets and stuff like that. So, normally you would think that Bitcoin would be in the same boat as that, but we have actually seen a kind of a move away from the SPX being positively correlated, and then we're now seeing gold being kind of in more of the same basket as Bitcoin, which I'm actually happier with because, in my opinion, we're kind of at a point in the economy, in the monetary system, where there's extremely easy money, easy credit. There is a lot of money printing, currency proliferation, and there is going to be a reaction from the actions taken from the current monetary policymakers today, which is going to be basically inflation. CPI numbers are going to be increasing, which is the consumer price index, which is going to be the average cost of goods and services in a basket, and that is not good for everyday individuals. Okay, now that we're talking about crypto, we're going to go into Brian O'Sullivan's question. Hey, can you talk about BSV Bull, please? So let's go into, I guess, this one. I think we're going to go to, I guess VeChain. It's not really looking phenomenal, to be completely honest. So you want to talk about BSV Bull. So like the 3x long leverage pair, I assume, and probably on FTX or probably on that one. So I'm going to assume you're on this one. I don't exactly know what exchange you're on and stuff, but let's go to the BSV Bull because, yes, okay, awesome, good to hear. So let's first go off to the weekly. We do have to understand that as a leveraged product, it's going to move to the downside continuously, right? Because let's say it's just moving 3x in volatility. So let's say it moves up 50% because it's 3x. Okay, so let's say it's making it easier. 30% up and then 30% down, right? To get back to the original state, 30% down is going to require more appreciation than 30% up, 30% down, if that makes sense, right? So in terms of percentages, an asset or a product that is leveraged and recalibrated daily, whatever it is going to almost be certain that it's going to continuously go to the downside. Just saying. So this is a short-term speculation tool and is not a way to long-term invest. If you're looking to long-term invest in BSV, I would not put money in this. I would actually buy the coin and then store it in a hardware wallet or whatever you're going to be choosing. So this is just a short-term speculation tool. I just want to notify that to everyone. So let's, because we can see it's at like 50 cents and it was at like 840. So pretty unbelievable. So let's first talk about what we're able to identify right here. Massive sell-off. Obviously, we can see this is February, so we're not even close to where the actual asset is in relation to previous kind of areas or locations within the price. So key level of resistance at around $2.50, $2.51. We can see it was a rejection all throughout the pullback phase before the next dump down back in kind of March, April, and then we saw it reject one more time back in late July before the next sell-off. So we do see a final support at around, let's say, 45 to 50 cents. And if it does move down below this zone, we can see kind of similar structures where we see prices hold, and then once it breaks below a certain zone, it just absolutely capitulates. And yeah, that's pretty brutal. And then if we do see this hold, we would then be looking for some descending zone to connect the three highs, the high, the lower high, and the lower high. And then we'd be looking for a squeeze, because then we see a rectangular zone, which is going to be holding as our support level, and then we see a series of lower highs. That's a descending triangle formation, and then you're looking for a break and retest of that zone. So that's on the weekly chart. That's just what we're seeing right now. We are seeing the price really at a major level of support. It's pretty risky, I would say, just assuming that it's going to bounce off this zone. Looking at a 2-hour chart, we still do not see a single green candle. When we now jump to the 1-hour chart, we do see a green candle. Just a ton of buy pressure around this zone, though, indicated by this huge green, or I guess red, but huge candle. That is a lot of buyers pushing the price all the way back up to the zone. We see a second validation at around the 48 to 50 cent range that this is an area of demand. And then if we're really looking at it from a 30-minute chart, I'd ideally like to see something like this, where we see, let's get this red. I'm just going to quickly draw something here. So what we would be looking for is some formation where this is a key level of resistance, and this is a low, this is a lower low. If you're looking at the candle closures, you might get a double bottom, and then you might get a higher low right there, and that's going to create a nice bottoming formation. Maybe you get a rejection once or twice right there, so that's your first rejection, second, third, and that is a nice bottoming structure. You're looking for that nice break and retest before you get the next leg up. You could even set a stop entry when it breaks above the high right there. You could set a limit order when it does pull back to validate this previous resistance zone. There's many ways to play it, but in terms of buying the around 48 cents to 50 cent range as a support, indicating lots of demand here, and you can see that within the previous structures. That's going to be the speculation you're making. This is going to be bouncing, and you're going to be looking to enter on the higher low and carry the overall momentum to the upside. So let's just quickly look at BSV USDT. Okay, I guess this is going to be the one we're looking at. Let's quickly look at the daily. So we can see that this was the February high, so it's the actual asset is much higher than the 3x leverage. So like I was saying, you do have to keep that in mind. So this is that long drawn out resistance. For example, Dash is sitting right on top of it, so that's a much better area to be looking for longs, in my opinion, just because you're still holding that as a key level of demand. You see a descending zone right there. I'm thinking that you could connect these right here to create a potential descending channel formation. Like I said, you'd really need to see this price hold this level, and then we can see all throughout this level of support, it was a level of significance. Support, 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 all throughout May, June, maybe not June, yeah, a little bit of June. All right, so in terms of your opportunity, Mr. Brian, I would say that there are better opportunities out there, just because, relatively speaking, BSV A is not on many awesome exchanges, and B, relatively speaking, it doesn't really stack up against some of the other altcoins that are doing far better relative to, let's say, kind of the summer or spring highs that we saw in April after that huge meltdown phase where Bitcoin fell 50% in a day. So, yeah, it's a forming a structure, and you could be looking for an opportunity once it breaks the zone for further confirmation. So what you'd be looking for is just a nice little squeeze, and then you're looking for something along the lines of that, where you get a break and retest of a key zone of confluence. Maybe this previous high turns into a new level of support, but that's what I would be looking for if I had to trade this as a pair. I bought at 68 cents. Oh, for the leverage, right. I was looking at the actual price. I was like, wow, I don't even think that's possible. Okay, so 68 cents. So you're looking at around 68. Let's move it down a little bit. A little bit higher. Okay, so I would say, if BSB Rockets will BSB Bull also 3x? Yes. So I don't exactly know when it's going to get calibrated, because if it's leverage, it should run 3 times more than the underlying asset, right? That makes sense. But it gets calibrated at a certain point, right? Because it has to run around 3 times. So there's an algorithm that's going to be kind of calculating that and then moving this at the same amount. So it's like a very weird product to kind of trade long term. If it's a short term trade, it's just very simple. It's just a tool for speculation. But once you start getting into like the position trading or even swing trading, it's a little bit dicey. Um, in short, yeah, if BSV goes up, this will go up around 3 times as much on that certain time frame. But if you're holding it, let's say for like 6 months to a year, you might actually not get that 3 times leverage long move to the upside, because if, let's say, BSB pulls back 20% twice along the way to this hitting, let's say, $5 or whatever BSV hits, this would have pulled back at a greater amount in relation to the actual underlying asset, if that makes sense. We'll just be holding it for the next 2 weeks max. Okay, then it's not the worst, but yeah, if you're holding it as like a position trade, this is going to pull back way more aggressively than the actual underlying asset, and it's going to be harder, and it will take longer to get out of the hole from the pullback in this instrument compared to the actual underlying asset of BSV. Michael says, do you know I can see this? Yep. So we are doing a live right now, and we're going over both the crypto market as well as the global macro. In specifics, just like gold, silver, and a little bit of WTI crude oil and the gold and silver ratio. So Brian Sullivan, no problem at all. And Michael, yeah, I do know that we are going live with this right now. So we're going to now kind of stop talking about this leveraged product, and then we're now going to go into the normal BTC chart right here, the 4-hour. And first, we're actually going to talk about the reasoning why I think the overall crypto market is going to continue towards the upside. Kind of not talking about gold and silver, although they are getting more positively correlated. We're going to first talk about the volatility and how it contracted quite aggressively, and how, in my opinion, we're going to see another expansionary push to the upside, because when we've seen these contractions in volatility, they have usually come out with pretty expansionary moves in either direction. So the first one was in November of 2018. That was when Bitcoin went from 6.2K down to like 3.2K in that triangle, right, in 2018. Hopefully everyone remembers. And the next time was in March in kind of April of 2019. And that was after the consolidation. We had a 4.2K level of resistance that we were not able to break above. And then we had a massive bullish candle that closed extremely high. And that started the huge move from 4.2K all the way to just under $14,000 for one Bitcoin. So we did have a contraction deeper than the one in March, in between March and the one that was like a huge drop. So we did get a pullback, but we did see a pullback in our first move as well, right? So we had that first strong impulsive push, and then we get a contraction in the volatility. We get some market breath, right? The market can't go forever without taking a breath, right? It has to pull back. It moves in waves. So this is the impulsive move, and now we're seeing, in my opinion, the potential completion for the exhaustion phase, and we're going to get the next impulse phase kind of shortly here. I can't give you an exact time frame, but I think the pullback is coming to the end. When we do look at the actual price action of Bitcoin, we'll be able to get a better understanding of the actual time frame. So I want to actually zoom out a little bit, take a picture of it, and discuss what I see and how these two structures are very, very similar. So let's go like this. I'm going to take a quick picture, and then we'll talk about the price action of Bitcoin back in the first consolidation of May until kind of mid-July when it started breaking out, and what we currently see right now. So initially, we had a nice symmetrical triangle, kind of like here. We had a breakout, but we instantly got rejected by the sellers. We have a very similar structure right here. We initially had a symmetrical triangle right here. You can make the ascending zone a little bit higher. We had a breakout. We instantly got rejected by the sellers, right? And then we just consolidated, making lower lows and lower highs. Consolidated, making lower lows and lower highs. That's exactly what we're seeing right now. And this is after a very strong impulsive push that we saw right here. So now, in my opinion, we're going to get a little bit of noise. We're going to get a little bit of a consolidation, market breath, contraction of volatility. I don't personally want to be trading in that type of market environment. It doesn't make sense. You're not going to get follow through. I'm looking to enter before the strong impulsive pushes. I don't want to be entering before long drawn out consolidations that I'm going to have to just wait patiently for who knows how long, right? I don't want to be entering stuff like this. I want to be entering stuff like this. So that's what we're looking for, and we're looking to see a little bit more of a deepening in the contraction. We can see that this level of support, let's just take some of the drawing out so it's a little bit easier to see. Hopefully you're able to see the kind of similarities between these two price action structures. So we do have the lower level of support and the higher level of support, lower level of support right here, right? And then the higher level of support holding as the higher low, lower level of support, and then that low, that low, that low holding as the higher level of support. So what we're looking to see happen is we see our first high, our lower high. Ideally, we'd like to see this hold for a little bit, maybe move up and have a third rejection of the lower high, creating a descending zone like so. Very similar to what we saw right here, and we want to see the price hold a key level of support while holding a descending zone, contracting the volatility, and then once you see the market structure make a series of higher highs and higher lows, breaking resistances, holding supports, sort of this stuff, then you're really looking to enter because the acceleration is going to kind of continue and get greater and greater and greater until you kind of get a blow off phase like we can see right here, a huge upside move, and then we're going to get the sellers to kind of react, buyers from kind of down here to start selling because they're in profit, and the whole market cycle moves on, right? Because there needs to be a market breath before the next impulse move. So in short, I think that's kind of what we're seeing right now. Is ideally we'd like to see, let's get the marker here. We want to see that 11.3K. Let's not do that. We ideally would like to see the 11.3K-ish zone hold. That would be, in my opinion, a really good situation because then we'd be very similar to what we saw right here. And then we also want to see this descending zone with a series of lower highs. Right here, lower high. We want to get that one more validation in order for it to be 3 validations of a descending zone, which in my opinion is enough to use that as a structure so then we can actually trade that upside move. So In short, that's exactly what I'm thinking on BTC. I think there's a little bit more time before we actually look to take action, but as long as it's holding structure, I'm pretty happy with where things are going. So that's going to be BTC. We're now going to quickly touch on kind of the altcoin market cap here. So this is total two. So this is everything excluding Bitcoin in terms of crypto market cap. And we can see it's consolidating a little bit. Altcoins are not really doing as well as they were a little bit before, but I'm still looking at altcoins for longs. Let's quickly look at the US dollar, and I think that's going to be it for today because this is going to be a pretty important asset to be looking at. So this is a 4-hour chart. The $92 range is a very significant zone. When we jump to the weekly chart, we see back in 2015, 2016, very strong level of support right here. And if we go to the monthly, we can see big, long wicks right there. Lots of rejection, lots of demand and buy pressure at around that $92, $93 range. So we're right at that level right now. We also do see higher lows on a large time frame. You know, we did break that level, but I'm going to be mainly looking at horizontal levels. This is kind of unvalidated. It does have 3 zones, but if we are actually using the candle closure, it would be something like this. So that could be a fake out, and this could actually be the true level of support. So I'm going to be patient and see if we get that third validation right there, and that could be the bottom for the US dollar index, which means that we could get some strength in the dollar because it's been really been battered quite a bit. So I wouldn't be surprised if we get some bullishness in the US dollar. Like I always kind of like play with my bottoms and tops, play out with my bottoms and tops. I mean, we're looking for either the roof, right, or the bottom, or the floor, right? That's basically the two things we're looking for, and we're looking for either a nice bottoming with a series of lower lows, holding support, and then higher lows. On the top, it's vice versa, but we do see if we're able to get something along the lines of this, right? That's a really nice bottom. And then this zone is going to be the key level of resistance. And then we're looking for something like this to continue the trend upwards. So if that happens, strength in the dollar probably is not great for crypto. Usually we want to see weakening of the dollar in order for crypto to go up. But in this crazy world, you never know. I do think if we do get some strength in the dollar, the US equity markets will actually start falling. So we're talking like SPX, NASDAQ, Russell 2000, as well as kind of global markets, because I think the US dollar is the main place where people are going to be going to for safe havens if the US equity market or kind of global equity markets start to tumble. So that's going to be a place to be looking at in an opportunity if it does arise and come to fruition. So that's going to be it for the video. Thank you very much for watching. Hopefully you got some value from it. If you found this useful, educational, entertaining, it'd be great if you give it a thumbs up and subscribe to our channel so we know that we should make more videos like this. If you do want to watch these live, ask questions, we did go over a couple people's questions in the YouTube live today, kind of in the middle of the video when we started the crypto market update. If you would like to get your answer questions similar like that, we do these Monday, Wednesday, Friday at around 10 to noon or like 10 to 1 ish. Obviously, every day is not going to be exactly the same in terms of how long they are and stuff like that, but we do them around that time, PST, Pacific Standard Time. So if you have any questions, drop them in the comments. Thank you very much. Al Santurno. Thank you very much. I appreciate that greatly. Until next time, have a good one.